Hi, I am Anna. I come from www.ntvforex.com. A cautious outlook across major markets, but China data hints at risk aversion. Video analysis. http ntvforex.com News ID E5AA46814 11:35:29 AM Market Overview. There has been a degree of uncertainty that has taken over markets as this week has developed. The change factor seems to have been a recovery on Treasury yields, which has in turn stabilized the dollar. Yields have picked up as a run of data out of the US has come in ahead of expectations. Starting with a surprisingly positive non-farm payrolls report, inflation for both consumer and producers has been positive. There is a sense that the previous move into treasuries and out of the dollar has been overdone. Coupled with a huge supply of treasury issuance on the market this week, yields have pulled strongly higher. 10-year yield up 20 basis points in just over a week. This stabilizing of the dollar is also generating an uncertain outlook on Wall Street, and holding patterns across major forex. The huge corrective profit taking on gold looks to be a little more stable, even if the market is lower today. After wild volatility and a 10% correction on gold, the dust is still settling. However, the question of whether this is the end of the correction is still likely to be determined on the composition of any U.S. fiscal support program if one can be agreed. Risk appetite has also not been helped overnight by the announcement of Chinese data where industrial production and retail sales both missed expectation, suggesting the recovery is not going to be smooth in China either. This is something that could play into the near-term dollar bounce back. Wall Street closed marginally lower with the S&P 500 0.2% at 3,373 and still off its all-time highs. Despite this, the U.S. futures are unwinding these losses early today with the E-mini S&Ps bouncing 0.3%. Asian markets have been mildly positive overnight, with Nikkei 0.2% and Shanghai Composite 1.0%. European indices are though looking a touch cautious, with FTSE futures and DAX futures marginally lower. In Forex, there is a shade of risk aversion creeping in, with the slightest USD gain. It is interesting to see AUD performing well again, whilst NZD continues to struggle. In commodities, gold is back lower by 0.5% but silver sharply down again 4%. Oil is once more mixed. Friday is a day packed with data on the economic calendar. Eurozone flash GDP for Q2 at 1000 BST is the second reading of Eurozone growth and is expected to be unrevised from the preliminary flash reading of 12.1% after a Q1 decline of 3.8%. Into the US session, the Tier 1 data comes thick and fast. First up at 1330 BST, the U.S. retail sales, which are expected to show ex-autos sales being 1.3% in the month of July after a 7.3% bounce in June. U.S. industrial production for July is at 1415 BST and is expected to grow by 3.0% on the month after 5.4% growth in June. Capacity utilization is expected to improve to 70.3% from 68.6% in June. Finally, the Michigan sentiment at 1500 BST is expected to decline slightly to 72.0 in August from 72.5 in July. This is expected to be driven primarily by a deterioration in the current conditions component to 81.8 from 82.8, whilst the expectations component is expected to improve slightly to 66.7 from 65.9 in July. NBSP chart of the day: AAUD/JPY. With the increase in bond yields hitting the yen and risk appetite remaining broadly positive, Aussie yen has regained some upside momentum this week. However, as this market seems to still be fairly uncertain right now, we see a slight pullback in the past couple of sessions. Despite this, the trends remain positive and the bulls will be eyeing the next opportunity to buy into the weakness to test key resistance 76.85 for a move to the highest level since May 2019. The resistance of the June-July highs at 76.75-76.85 are under pressure after a series of higher lows throughout the past couple of months. A closing breakout would be the next step forward for the recovery. Strong momentum configuration is seen through RSI and stochastics indicators suggesting weakness is a chance to buy, although there is a slight caveat with a lack of traction in the MACD lines. There has been a consistent use of the NBSP rising 21-day moving today at 75.78 as a basis of support for the past 6 weeks. The hourly chart shows initial support around 75.85-76.25. Breaching 75.65 as an initial higher low would be disappointing now, whilst below 74.80 would mean the bulls lose control. We look to buy the weakness for a breakout above 76.85, which opens 77.50-78.85 as the next resistance band. NBSP Brent crude oil. Considering the bulls have struggled for weeks to close the big bear gap at $45.20, and doing so has come with no change in sentiment on oil. A continued inability to get any sustainable traction to the upside means that the shackles remain very much on for the bulls. There is still a pull higher, where a series of higher lows remains intact and the market eventually pushed through resistance. However, it remains a painstaking rally of fits and starts but no conviction. In the past couple of weeks the resistance has formed at $45.80, $46.25, and we still prefer a positive bias towards testing this. Buying into the weakness is still also a preferred strategy, with $44.25 being initial support in the past week. Holding above $41.30 maintains the recovery outlook. Above $46.25 opens $53.10, $53.80 as the next resistance, but do not expect it to get there very fast. NBSP Dow Jones Industrial Average. In recent sessions, the bull run on the Dow is just beginning to show a few signs of fatigue. The market may have only closed 0.3% lower last night, but another marginally negative candlestick also breached the previous day low for the first time in 10 sessions. It was also a second session in a row of a lower daily high too. At this stage, these are only minor signals, but makes for a more cautious market. It comes with the RSI hitting around 70 this week, potentially stretched, and stochastics beginning to tail off. The bulls now need to defend the band of near-term breakout support 27,580-27,625. A closing breach of 27,580 could see the market dragged back towards 27,070. We would still view any near-term correction as a chance for the next medium-term buying opportunity. However, the upside potential for this bull leg is questionable now. Resistance at 28,045 and 28,155 is now increasingly important. NBSP. Read more analysis here. Euro USD, GBP USD, USD JPY, Gold. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.